Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It's Halloween 2019. That rhymes, doesn't it? Shout out to my man Crypto Yo for the song request today. B.o.b. Soul Glow. Thanks for this one, man. Never heard of this one. Looks like it's a newer joint from B.o.b. Sounds good as always. What's good, people? Hope you guys are doing well today. Happy Halloween. As I stated at the beginning, today we're going to be looking at Litecoin. I tweeted this out and actually did an article I posted on my website regarding this. Decrypt Media kind of poses the question whether or not Litecoin's falling hash rate, it continues to fall. Is it a worrying sign for Litecoin's network? We're going to take a look at some of the points they bring up regarding this. And I just talked about how Bitcoin Cash, supposedly this one analyst was saying it was going to be a catastrophic moment after the halving for Bitcoin Cash, which happens a few months or a couple of months before Bitcoin's halving. Kind of the same concept as far as what they thought was the issue and what would happen after the actual halving. A lot of miners would just jump ship and go mine Bitcoin. And in that article, they actually drew parallels to Litecoin's situation. But again, we'll take a look at it. Hash rate, if you guys don't fully correlate that, is basically the security of the network. So the more hashing power you have on the network, the more miners you have on the network, the more secure that network is from any double spending attacks. Second article is out of Cointelegraph. IRS gives new guidance about cryptos. It's been a while, but we're finally getting something new from them. We'll look at the details on this. This was actually issued on October 9th, so earlier this month. It's the first time that they've given new guidance since it's been a few years, actually. Been a few years, quite a few years. So take a look at this. And also out of Cointelegraph, we've got volume of crypto futures trading has caught up to spot trading, at least 50% of it. We're going to take a look at the quick details of this one. I'm going to point out in this article which platforms you should be keeping an eye out on for manipulation. We'll go through that in a second as well. But before we get started, I want to give your attention to Moon Lambo. They've got a Halloween sale going on. Halloween blood sale, kind of fitting there. They take 15% off everything. All tees, hoodies, sweaters, and hats and jackets. That offer ends on November 3rd. So take advantage of that. You've got a few days to do that. That's shopmoonlambo.com. And I've got a sale as well. That's 15% off of my BitMEX trading bot Signal. Hands-free trading on BitMEX basically follows my algorithms for Ethereum and Bitcoin. And we trade that on margin on BitMEX. Make sure you use the word Halloween 19 at the checkout for that. And that applies to 3-month, 6-month, and 12-month subscriptions. I'll leave a link to that in the description. It'll actually be pinned in the comments section. So that ends Monday. Let's go ahead and take a look at this heat map for today. Bitcoin is up 0.5% to $9,220. Ethereum's down almost 0.5% to $181.88. Binance is up though a little bit, almost 1% to $19.94. We've got Litecoin up 0.25% to $58.22. EOS down 2% to $3.21. Bitcoin Cash down 3% today to $278. And for whatever reason, Bitcoin SV, that's Satoshi Visions, Craig Fake Toshi's coin, is down 6.6% today, but it's been on the tear. I have to admit, it's been on a tear ever since Bitcoin blew up. It went with it. To let you know how speculative this market still is. It's at $127 right now. And lastly, let's take a look at this Bitcoin chart on TradingView. To me, it just looks like we're in a classic ABCD pattern. We're kind of filling that out right now. I would say that's A, B, C, and hopefully what's forming right here will be D. D starts or initiates the next 1, 2, 3 pattern. If you're familiar with like Elliott Wave, kind of following that a little bit. I think Elliott Wave does A, B, C, then 1, 2, 3, 4, 5, and then just repeats itself. That's where I think we are though. This area right here though is for sure, in my opinion, a good support area for us now. 8,300. So if we don't get back above this 9,400, we could head back lower, but I don't see us going any further than 83. I think the former will happen, where we complete this ABCD pattern and we just take out this last high right there. All right, let's take a look at that first article out of Decrypt Media. We've got Litecoin's falling hash rate. Is it a worrying sign? It says that Litecoin's hash rate has dropped 60% since its halving, and it poses the question, will it recover? Well, Litecoin's network is rapidly becoming less secure since the new amount of Litecoin being mined was cut in half on August 5th. The network's hash rate, or the computing power that protects the network from attack, has similarly fallen. Every 4 years, Litecoin undergoes a halving, where the mining rewards that cryptocurrency miners receive from mining new blocks get cut in half. It's the same with Bitcoin. However, when this happens, it means that miners receive less money when mining new blocks, making it uneconomical to continue spending computational power or resources earning new coins. While Litecoin founder Charlie Lee argued that miners would continue protecting the network, the miners had other ideas. So since the latest mining block rewards declined, the total hash rate on the Litecoin mining network has dropped over 60%, from around 500 terahashes to its current level of just 193 terahashes. It is heading rapidly towards its lowest point since March of 2018, which was 146 terahashes. While this isn't the first time the network hash rate has become this low, or turned this low, I should say, it's falling faster than it ever has before, and this could be a problem for the network's security. The reason why high hash rate is important is because it protects the network from attacks. Earlier this year, Ethereum Classic suffered a 51% attack, where malevolent actors took control of the network by having more hashing power and stole more than $1 million in Ethereum Classic. But to put it into context, Ethereum Classic's hash rate is 20 times smaller than Litecoin. While Litecoin is still harder to attack than Ethereum Classic, there's more money on the line, making it a bigger target. It has a current market cap of about 3.8 billion. On top of this, the rise of cloud computing is making it easier for hacks to occur. Last year, a crypto enthusiast known as GeoCode51 live streamed a 51% attack on Bitcoin Private. He told CoinDesk that using cloud computing and services like NiceHash, where you can rent hashing power, made an attack 100 times cheaper. After the halving, Lee tweeted, "Seems like miners have not shut off their hash rate at all. Instead, we are mining at a rate of a block every 1.4 minutes on average, which is much faster than the expected 2.5 minutes. Litecoin's network is healthy, but the network's hash rate continues to drop. It now presents a different picture, and if Litecoin's price keeps falling, its hash rate could drop even further." Lee is now working on such radical plans as bringing privacy transactions to Litecoin. Will this be enough to turn the fortunes around? This is an experiment, all of this. I remember when, we were experiencing, or at least when I was around, when we experienced the last halving with Bitcoin, it was worry then. I was mining big time at that point. And, it was a lot of worry in the community about what would happen. This was all new. We were playing with game theory and just seeing how it all unraveled. And luckily, we had enough support, or at least the community had enough support of dedicated miners on the blockchain, on Bitcoin's blockchain, to continue to mine, even though they were getting half as much as they were before. Now, it did rise up almost 2x leading into that halving, so it kind of compensated. But when we have a situation like now with Litecoin, it's dropped, the price has dropped 60%, and the hashing power has dropped as well. However, I will have to say, difficulty rates adjust. The difficulty rate is essentially making it easier or harder for you to find a block. So if hashing power or price drops and people leave the network, the difficulty rate comes down as well, making it easier to find blocks. So it kind of balances out over time, even though it will be great to see Litecoin's price head higher at some point to compensate for the halving. We'll have to see what happens. At this point, I'm not concerned at this point, but it's all an experiment. what will happen when Bitcoin halves in May of 2020 if we don't see an increase in price leading up to that to reflect the halving or decrease in supply. At the end of the day, this ecosystem has to incentivize the miners to keep doing it to make money, or otherwise they'll move to another coin or just fold. So we'll have to see what happens. Like I said, I've been through the mining season 1.0 if you want to call it, and I've got rigs. I got one right here just sitting here, old ASIC rigs. When that halving happened on Litecoin, stuff kind of dried up. We will have to go to other coins as well, Dogecoin. So people jumped around and to keep making money. But we'll have to see. I'm not concerned at the moment. You guys let me know your thoughts on it, though. Do you think this is something you should be concerned about when it comes to Litecoin? I mean, a drop of 60% is pretty big at that pace because it drops so fast. But as the article pointed out, the levels where it is right now is still a little bit higher than where it was in March of 2018. So the network was secure then, so it's still secure now. It's just that if it continues to drop, that could be an issue for double spending. Second article out of Cointelegraph. New IRS tax guidance targets crypto and U.S. persons who use it. This is what I'm talking about, people, as far as us using cryptos like the white paper kind of intended for it to happen. But it says here on October 9th, 2019, the U.S. Internal Revenue Service issued Revenue Ruling 2019-24 and a series of frequently asked questions identifying rules governing U.S. taxation of digital currencies. Taxation in the U.S. is unbelievably complex, on purpose, may I add, but the new IRS guidance takes a step-by-step approach to address some of the most common issues facing holders of digital currencies. The basics are as follow. If you hold digital currencies and you sell or exchange it, you are subject to U.S. tax. If you are granted digital currencies in the form of a salary or as a result of hard fork, you have taxable income. If you receive digital currency as a result of a gift, there is no immediate tax. So that's the only one that kind of surprises me. Normally, if you receive a large sum of money from someone, that's considered a gift tax, and you have to pay that at the end of that fiscal year. But it looks like with digital currencies, that is not the case. U.S. taxation of digital currencies is limited to U.S. persons. Who is a U.S. person, you may ask? U.S. citizens, U.S. green card holders, and individuals who spend more than 183 days in the country. How do you measure your gain or losses from a sale or exchange of currency? It's the difference between your digital currency cost basis and the fair market value of that property you received in exchange. How do you know what the cost basis is? You may ask. The FAQs provide detailed guidance, but essentially the IRS allows two methods for identifying your basis. One, you can specifically identify the exact currency sold, trace to the ledger, and use the cost of the specific currency to determine your gain or loss. The second way you can do it is use the first in, first out method, meaning your basis is computed based on the cost of the oldest currency acquisition in your wallet moving forward in time as you continue to sell currencies. Some other questions posed here is, what about digital currencies provided as compensation for services? That type of distribution is treated as ordinary income, not as capital gains, similar to cash paid in the form of salary or wages. But my question is, in this one, how do you determine whether or not something was gifted to you or not? How do they determine that? I don't know. That's going to be a tough one for them to track. It's going to be all voluntarily done on your end for that particular one. What about cryptocurrency forks? They say the revenue ruling holds that when a taxpayer does not receive units of a new cryptocurrency as a result of a hard fork, the taxpayer also does not have gross income. That is the good news. However, when units of a new currency are distributed either as a complete currency replacement or split with a new cryptocurrency being issued but old currency still valid, revenue ruling holds that the taxpayer has accession to wealth and therefore has ordinary income. The amount included in gross income is equal to the fair value of the new cryptocurrency measured as of the date of the distribution, usually via airdrop. One important part to really highlight here is that they say there's no de minimis exclusion, meaning every transaction involving digital currency must be reported. What about a purchase of a cup of coffee, you say? And this is what I was talking about the other day with crypto cash. This payment gives rise to a taxable exchange. The value of that coffee you just bought, less the basis in your currency you provided, must be computed and reported to the IRS as a gain or loss. Wow. So it just kind of goes on in further detail about things, and you guys can read the whole article, and I actually suggest that you do read the article or at least give it to your accountant to check this out so they kind of understand what's going on if they're not up to speed on these things. What are your thoughts, people? What are your thoughts? How will they maintain and audit this? This seems like a lot of work when they have very little in that department at this moment. I'm sure they're going to ramp up on it for sure. So let me know your thoughts about these new IRS rulings. Oh man, it seems like a lot of work. It's a lot of work, and it's going to cost you, the end user, because it's going to require your accountant more work. They got to do more work for these types of transactions. So I don't know. You guys let me know your thoughts on that. The last article we're going to take a look at today is also out of Cointelegraph. It says the volume of crypto futures trades is catching up to spot trading. It says crypto futures trading volume now reportedly amounts to nearly 50% of the value of spot trading on crypto markets, according to Bloomberg. It says 13 exchanges were analyzed, citing volume data from 13 major global crypto exchanges. Bloomberg reported on a massive growth of cryptocurrency futures markets as of October 31st. The analyzed exchange include institutional digital asset platform Backed, the Chicago Mercantile Exchange Group, CME, Binance, Bitfinex, b.o.b Derivative Market, Kraken, FTX, Bits, Deribit, CoinFlex, Bytebit, OKX, and BitMEX. Now, out of those, the ones that I know of, I don't know about all of these, the ones that you need to pay attention to, and I think has an actual direct impact on spot price, will be BitMEX, will be OKX, Bytebit, Deribit. I don't know about CoinFlex, not too familiar with that one. And Backed. The Chicago Mercantile one is a cash only settlement. I don't know about Binance and how they're doing it, but the ones for sure is BitMEX, OKX, Bytebit, Deribit, and Backed for sure. But it goes on to say spot trading is simply buying and selling a commodity, or in this case, a crypto asset, at the moment of the trade. Prior to the launch of the first Bitcoin futures platform back in 2017, spot trading was the principal option available for crypto trades. The Chicago Board of Exchange launched its first trading BTC-based futures contracts on December 11, 2017, just a week before the launch of a similar product by the Chicago Mercantile Exchange. Bloomberg report follows a new Bitcoin futures volume record on major digital assets platform Backed, which launched its service on September 22nd. And so on October 26th, Backed traded 1,183 Bitcoin futures contracts worth about $11 million after hitting a previous all-time record of 441 Bitcoin futures on October 23rd. So again, this is what you got to pay attention to. Backed. That's the major one, and the one I'm most concerned about is because that one is settled in Bitcoin. And so that means that the exchange at the end of those contracts will have to go out into the market and buy Bitcoin or balance their books, and that will directly affect the spot price of Bitcoin at the end of those futures. So you guys let me know your thoughts on this. This will eventually pose a issue here, I think, where we're seeing the same thing going on in COMEX, and how the price of gold, silver, and other precious metals and commodities are being manipulated. Light sweet crude oil, Brent crude oil, those futures can be manipulated simply because you got all this fiat currency being created, essentially going at a commodity that has a limited supply, or at least perceived to have a limited supply. This is one thing I will have to say. With COMEX, you don't have to settle, and most contracts actually just roll over. Very few actually settle their contracts for delivery. So I don't know if you guys understand the futures market, but when a contract settles on the COMEX, you're literally supposed to take delivery of that particular option. But nowadays, very few organizations or traders actually take delivery of those commodities, those goods. So we'll have to see what happens, because in fact, you do actually take delivery of those Bitcoin. So it's going to be interesting to see how this all pans out. You guys let me know your thoughts about that, though. And that's pretty much it for today, ladies and gents. Shout out again to Crypto Yo out there on YouTube for the B.o.b Soul Glow song request for today. Make sure you guys like, share, and subscribe. Again, click that bell to be notified about unbiased crypto news reported by yours truly, Crypto Blood. Almost 7 years in this crypto game and still learning. I'm out of here, people. Let it shine.
I'd like to give a big round of applause to my band, Sexual Chocolate.